What is up, everybody? Good morning, Dr. Vaughn here. Hey, I'm saying hi from my Airbnb in Austin, Texas. Austin, Texas. It's going to be awesome. Awesome. Hey, I have a great guest for you today, Mr. Chris Naugle, America's #1 money mentor. He's my go-to finance guy, and super excited to have Chris here with you today. He's finishing up a call. He'll be on with us shortly. We have a new format we're going to try today. We've got some quizzes, some questions for you, and then opportunities to win prizes. Good morning. Hi, Olive. How are you doing? From Tanzania. Abby, what's up? Liz, good morning, everybody. What's up? Hi, Heather. Thank you guys for sharing. This is really going to be helpful and insightful. Austin, Texas is awesome. Thanks. Oops. Yep, prizes. Good morning, everybody. Good morning. Thank you for tagging people. Appreciate that. Wow. Awesome. Hope you're doing good. Today is, what is today? June 8th. Tomorrow's my daughter's four-year-old birthday. So happy birthday tomorrow to Mason. All right. Melbourne, Australia is in the house. That's right, 6th Street. It's awesome. It's awesome. Still doing social distancing, wearing our masks, doing all that stuff. Hey, Minerva. Oh, I got to take Erica to Corpus Christi. Thank you guys for sharing. Thank you guys so much. We're going to have Chris Naugle on today, America's #1 money mentor. We're going to give away some prizes. We're going to do some awesome stuff. Good morning, Rosemary. How is everybody? What? It's your birthday too? Yeah, awesome. Tomball's in the house. I'm in Houston normally. OKC's in the house. What's up, Helen? Good morning. Michigan. Stay safe, Michigan. Good morning. Made it live. Love it. Love it. Hey, Australia's in the house. It is June 9th. Happy birthday to Mason. That's awesome. Hope everyone's doing good today. We're gonna give away some gifts today, some prizes. I don't know exactly how we're gonna do it. What's up, Brittany? Oregon's in the house. How are y'all doing? Thank you guys so much for sharing. Appreciate that. Hey, listen, I want you to understand, Geraldine, Facebook user, Terry, Quitman, Texas. Oh, Orlando's in the house. Hey, I want y'all to understand that this economy is fake, and don't believe the stock market. It is the calm before the storm. I'm not a financial advisor. That's my man, Chris Naugle. He's gonna do that for you. But it's not political. We're not gonna make this political. I know it's an election year. There he is. And but we got to make sure that you guys are like healthy and financial health. So we're gonna have a great show for you today. We have a way for you guys to hold on. I'm gonna get Chris on here. Here he is. I see him. We're gonna do quizzes. We're gonna ask you questions. We're gonna give giveaways. We will promote. Chris Naugle has this money school where he's teaching you guys every week up-to-date information. I'm in the program. It's unbelievable. It's amazing. And so we'll talk a little bit about that. But let me bring on my buddy, Chris Naugle, who's a former pro snowboarder, owned a chain of stores, clothing stores, and snowboards, surfboards, skateboards, that sort of boards. You know what I'm saying. He also was a financial planner, worked for big firms, and now as a real estate investor has done over $50 million worth of real estate. And he has also had a hit TV show on HGTV called Risky Builders. With that, let's introduce my good friend, Chris Naugle.
Hello, everybody.
Oh, that was a delay. How funny. How are you doing?
I'm doing awesome. Doing awesome.
There you go.
What is going on with this thing?
I know. There you go.
Weird. Yeah. All right. Perfect.
Let's jump into it. We're going to do some quizzes. We have 10 questions. What are the prizes people are going to win?
Oh, my goodness. Well, I've got a mystery prize.
Uh-oh. We got actual prizes.
Hang on. Let me put this on so that we don't have an echo. So this is going to be a mystery prize, which whoever wins this, I still don't even know what you're going to get, but we're going to give that away. I've got shirts, lots of shirts. So either you run the day or the day runs you. So these are women's shirts and men. So I have men and women for that one. This one here, Buffalo, New York. Invest in yourself. You can afford it. I've got, oh my goodness, I've got real estate books. I've got my buddy Bob's book, which says Get Out of Your Own Way. I've got lots of my books, Mapping Out the Millionaire Mystery. Okay, a couple of those. Private Money Guide, giving away books. And then I've got some really fun little tchotchke stuff, which are some glasses. Okay, got glasses. We've got pop-ups for your phone. I got all sorts of fun stuff that we're going to play with today.
That's awesome, man. I'm super excited to have you on. Couple things real quick. Well, last time you were on here last month, the stock market had tanked. Like it went, the very first time you were on, it dropped down to like 19,000, the Dow Jones. Now we're back up to 27. What do you make of that? Did you overpredict? Are you wrong, Chris? Are you willing to say you're wrong?
Not wrong. I'm not wrong. I'm right. And you don't need to believe me. There's way smarter people than me, like this fella here. This guy's name's Ray Dalio. Ray Dalio is the largest hedge fund in the world, Bridgewater Capital. And so don't believe me. Just read what he's saying. I know how to read charts really well. I know how to predict market patterns really well. What you're seeing right now is speculation, optimism built into the markets. It is not going to hold these levels. But I can't sit here and tell you that I know when the market's going to go down because I don't. But I can certainly tell you it cannot hold these levels, and you just watch.
Well, why can it not hold these levels?
Because when you actually look at the markets, you have to really determine what's fact and what's fiction, right? You have to understand what's real and what's not. And what's real right now is that, yes, there is businesses going back, but they're not back to capacity. They're not going to be back to capacity. There's still a ton of fear. There's lots of companies going bankrupt. Main Street predominantly is still closed, depending on what part of the country you live in. And people are still not back to work. Unemployment numbers keep going up. And I know some of you are like, yeah, but just last week, Friday, the market rallied 800 points. I made a ton of money Friday on the markets trading it, but it rallied 800 points, and it rallied because of optimism, speculation. Jobs reports came out, and jobs reports showed that there was less people unemployed. Listen, if you folks truly believe the job reports up to this point, if you believe that that's real, off of real data, and they're really reporting the real numbers, then believe this one. Last night, I was looking out the window of my bedroom, and there was a white unicorn, and it was staring back at me. It smiled, and then it said, "Come jump on and fly with me." You would believe that too.
So why shouldn't we believe the job reports numbers?
They've never been factual. They've always been manipulated, and it's an election year. So it's an election year. That's the only thing you really need to understand. Nothing is making sense. It's an election year. And I'm not sitting here saying, doom and gloom, the market's going to crash and burn. But I tell you what, we are not far off of the all-time highs that we were at when the entire economy and markets and everything else were booming. You guys remember that? It was only a couple of weeks ago. Now, does it seem like the economy is booming? Does it seem like everything's back? Whoa, yes, everybody's back to work. How many people do you know that are out of work? How many people do you know that are furloughed? They're maybe going to get your jobs back, but maybe not. Does that look like the same economy and the same market that we had a couple months ago? No, folks.
Well, if we look at the Great Depression, there was a whole roaring 20s. It was a huge boom market in the stock market, roaring 20s before it all came crashing down.
Absolutely. And the same thing before 2008. It was a roaring markets in 2007. Nothing could have shattered those markets. And then just one thing, one domino went down. It brought the whole thing down. But you can look at the Great Depression too, because there was a big drop and then it came back and then it really took hold. I think that's what you're going to hear. And that's what Ray Dalio and so many of the other experts. Look at Warren Buffett. You all know who he is. What is Warren Buffett saying? What is Warren Buffett buying? Is Warren Buffett all over the news saying, oh my God, the markets are doing great?
Selling. So look, without making this political, Chris, I saw a statement that was really a Trump press conference. And he said, the airline companies are fantastic. Look at their stock prices gone up. And Warren Buffett, sold his interest in American Airlines too soon. And even great geniuses like Warren Buffett makes mistakes sometimes, and he's probably regretting selling it. And I'm just sitting here thinking, like, Warren Buffett does everything for the long term. And just because Trump is right, maybe that stock rallied for that day, doesn't make Warren Buffett wrong. Am I wrong, or is Trump right?
Well, again, I hate politics. I don't follow politics, and I don't know anything about politics. So I never get into that conversation because I'm the biggest idiot in the room when it comes to politics. But I do understand one thing about politics, that when you're in an election year, politicians say and do things to get reelected. That's all I'm going to say. And when he's going on, he's trying to talk about the markets coming back. Remember, he's right before an election. He wants to win, just like, either side wants to win, but they want to win. So therefore, what will help him win is showing that the economy's coming back. It's positive for him. Okay. So what is he going to focus on? Of course, anything he can focus on. Airlines coming back. Airlines are coming back because, folks, nobody was flying at the beginning of this. No one. So of course they're coming back, because at least some people are starting to fly a little bit. I know people that are flying right now, and I'd start flying this month. And all they tell me is it's a ghost town at the airports. Yeah. It's awesome flying. Every seat is like first class.
Yeah, it's nice. I'm in Austin right now, and 6th Street there's a few people on 6th Street, but it's not super busy. And Eric and I went to a nice steakhouse last night called Perry's, and man, it was empty. And it's a big, beautiful restaurant, big and beautiful. And they have, even though they have more capacity, their people are still scared to go out. And Eric and I had the whole patio to ourselves. I mean, it was like, it was pretty crazy. But I don't know how a business like that, where the margins are already so low, how are they going to stay in business? I just don't see it happening.
A lot of them won't. There's predictions by some of the greatest saying that over 60% of small businesses will go bankrupt at the end of this. But you're probably sitting there saying, yeah, but the markets are rallying. Look, there's a huge disconnect between the stock market and the reality of what's really happening. A huge disconnect for many reasons. Okay. There's a lot of stimulus money. They printed $2 trillion. That $2 trillion absolutely has gone to work and is starting to work. You're seeing it happen right now in the market prices. A lot of people unemployed, and they're living better than they were when they were working because they're making more money unemployed. Do you think that's not sustainable, folks? It's not, and it's not going to be. And the world, I don't even say just the U.S. The world is in for a reality shock come August, September, October, when some of this stimulus starts to peter out. Now, could they do a second round? Yes, and they probably will. It's an election year. They'll print another $3 trillion, and that $3 trillion will take the value from our dollars, because that's how it works. They print money, it steals the value because it has to get value somewhere, and there is no more gold in Fort Knox. If you haven't noticed, the leprechauns, that little rainbow that they ride, made its way to Fort Knox, and it took all the gold. The leprechauns got the gold. I'm trying to make this fun, but there is no more gold. There is no more value of our dollar. The only reason the U.S. dollar is valued where it is it is the currency used to value oil, and it probably will not change, but that's why. So when they print $3 trillion or $2 trillion, that $3 trillion needs to derive value from somewhere. And it takes its value from our current dollars, which is why I'm always saying people need to be in control of their money. They need to be in control of their best, most valuable dollars, which are today. Because if you give up control of your dollars, I guarantee you they will be worth less in the future. It's called inflation. You already see it happening, and your dollars are becoming worth less and less for every dollar they print.
All right. let's get to our games. What's the first prize you want to give away?
Let's start with this. It's a pop-up for a cell phone. So you just pop it on the back of your cell phone. Nice, easy one. And I like doing, and I want your help too. I like doing trivia, kind of like movie trivia. So what I'm going to ask is, there was a famous movie to win this one. There was a famous movie back in, it was either the 80s or 90s. I think it was the 80s. And it was a stockbroker movie. It was one that kind of changed the whole way all of us look at Wall Street and the stock market and everything else. This is a two-part question to win this. What was the name of the movie and who was the lead actor? First person to get this question, and Doctor, you got to tell me who gets it, we'll get this. And all I'm going to need is, I'm going to need your name and your address to ship the goods to you. Your name and your address. So who gets that? So it was a movie. I believe it was in the 80s. I need to know the name of the movie and the actor that was the main actor in that movie.
What was the question? What was the quiz?
The two-part question. What is the name of that movie in the 80s that made everybody realize what, the stock market was and I don't want to give too much more. And who was the main actor of that movie back in the 80s? It was a famous movie. You guys should probably already have it. I already gave the name of it away.
I see. Is this right? Wall Street, Michael Douglas?
You got it. All right. John gets the prize. This is all it's going to take, folks. We're just going to have some fun today. I'm going to ask questions to test your knowledge on the markets, and I started with an easy one. So Wall Street, Michael Douglas was the movie that changed it all for me. I watched that movie, and at that point, I wanted to be a stockbroker. That was a young kid. And I ended up becoming a very, successful financial advisor. And I owe it to that movie because I just love that. I grew up with nothing. And I always wanted to have that power and that control of money. And he did. Now, was he greedy? Yes. Did he get himself in trouble? Yes. I'm not talking about that. It was just stockbrokers. John gets this. John, I need your name and your address. And how do you want to handle that?
I don't know. Does he? Is that the
yeah? Can they message me directly from this, or probably not?
Probably not, but they can probably.
Okay, so here's the deal, John. Just write down my email and send me your name and address, and tell me that you won the pop-up. My address or my email is chris@themoneymultiplier.com. So Chris, CHRIS, @themoneymultiplier.com. Just email me your address and I'll ship that to you. All right, I got a whole list of questions, and these are fun. What'd you say?
Let's do another one.
Let's do another one. All right. So let's do this one. And in some of these questions, I just want the best answer. So name three of the biggest sources of debt for average Americans. I need the three biggest sources of debt for the average American, and I'll give away a copy of my book, The Private Money Guide, for this one. So I need the best answer. There's not one answer, but the best answer for the name of the three biggest sources of debt for the Americans, or for the average American. Let's see.
I know one. Ex-wife.
That could be. Let's see what people get. I have some answers written down here, and I'll just take the best of them.
I'm going to say home.
Okay. I'm glad somebody said that, because a lot of people think their home is an asset. A lot of people think a house is an asset. Credit card, home loans, student loans. Actually, that would probably absolutely nail it. So let's see. I'm going to I'm going to put your name. Yep. So Deetria Nicole. So I've got your name in here. So Deetria, email your name and your address to chris@themoneymultiplier.com and just tell me that you won the Private Money Guide. So credit cards are absolutely one of the biggest debts in the United States, but I love it.
Another winner. She actually came in first, Nisha. So
so how about we do two books? We'll just Nisha, and we'll give two away, because I just saw them, and I'm not going to be an Indian giver. So then we got Nisha. I got lots of books. So we got Nisha here gets one, and let's see. This one was Deetria. Yeah. So we got two books going away to both. My camera's goofy here today. And all they said credit cards, home loans, and student loans. Okay. The biggest thing I was looking for is home loans, mortgages, because a lot of people think that their house is an asset. Your house is not an asset. Your house is a liability, and it always will be until you learn how to change liabilities into assets, which is something that I teach, something that I can show you how to do. It's very simple. You got to change your mindset on how you look at the things you have. Your house is a liability. And if you don't believe me, just understand what a liability and an asset is. A liability is something that costs you money. Does your house cost you money every month? You're darn right. Does your house put money in your bank account every month? Chances are it does not. Therefore, it is not an asset. An asset is something that produces income or something that is viewed as, well, I mean, just look up asset, just Google it. But I was more looking for somebody understanding that their house is a liability. So both of you nailed this and you guys get it. So email me your address. You guys got the books.
That's actually a big teaching from Robert Kiyosaki. Rich Dad
It's huge. Yep. That's where I learned it.
And that's where I learned it. And that's what changed my life too,
yeah,
regarding that. So that's extra.
Absolutely. No, I think that's, you know, in a lot of the stuff that I'm doing right now with knowledge, you know, listen, I might be America's #1 money mentor, but I had a lot of mentors and I still have mentors today. And I learn every single day from my mentors and from the trainings that I still go on. You'll never, ever know everything. You'll never know everything you need to know. You constantly are evolving and investing in your knowledge, in yourself. It's the best investment you can ever make is in yourself. And don't ever let anyone tell you anything different. You know, somebody calls you and says, oh, invest in this stock. It's the best investment on earth. You should say, no, let me correct you. The best investment that I can invest in is myself. Always.
Hey, I got that answer right.
Well, that wasn't the question. So we're going to give away a shirt. So this one is Buffalo, New York. Invest in yourself. You can afford it. Very relative. And it's got our little logo on the back. So I can do any size in this. This is a women's shirt. So men, sorry, I don't think you guys want this. I have one for men, but this is a women's shirt and I can do any size. But let's see, what questions should we ask here? All right.
That's a good one.
This is a good one. How about we do another movie? You want to do a movie one or should we do a different one?
No, let's do something educational.
Okay, so let's see. This is a fun one. If, and I'm not picking, I just want to be, I was trying to say this. I was a financial advisor for 16 years. So I just want everybody to know I'm not picking on advisors. I'm not downplaying advisors. It's just, this is kind of what I was when I was an advisor and the things that we did and were taught to do. So this isn't a bad plug against advisors, but I want you to understand this because it's very important. If your financial advisor promised an average rate of return of 25%, keyword, an average rate of return of 25%. Would you jump on board? Okay, that's the first part. Yes or no. And then I want to know why or why not. The best answer wins. And then I'm going to teach you guys something here.
Oh.
So while the answers are coming in, I'm going to teach you something.
Okay. Come on, guys. Read that question one more time.
Okay. So the question was, if your financial advisor promised an average rate of return of 25%, an average rate of return of 25%, would you jump on board? Yes or no? And why or why not? The best answer wins.
How about that?
Nope. Too big of a promise? No, he's lying. Oh God. Okay. But you got to tell me why. Why is he lying? No, because that's unrealistic. Okay.
Too good to be true.
No, too good to be true. There's an underlying reason why you should be saying no, and I want to know what that is, and I'm going to teach you something once we get to that. No, cannot promise. That's actually a good answer. No guarantees. That's a good answer. No, because the money and time you put in is not worth it. Okay. These are all good, but that's not what I'm looking for. No, he can't make guarantees if you, that's good. He can't make guarantees of future market trends. Yep. Still an underlying thing that I'm looking for here. I love all these answers, but I'm still looking for one particular thing, which is what I'm drawing on this right here.
No, it is an average.
Yes. Wait. Okay. Wait. All right. How do you say your name? Is that Cami? Cami. Okay. Cami, I want to know why, what do you mean it's an average? Go one step further and you got that shirt because she's the one, that's the answer I'm looking for. 100, 200, 100. 200.
No, an average super high, super low.
No, an average of 25% is impossible. That would be super high and super low with the average to be 25. I love all these answers, but Cammie was the closest one, and I just need to know why she said what she said, because she was absolutely correct. Shane's kind of right. So let's see. No, would not settle for an average. Have a set amount. It's your money, not theirs. I love that, Kathy.
That's Erica's mom.
Oh, hi, Eric. Well, hi, Erica's mom. Not the answer I'm looking for, but these are all great answers, folks. And see, we're all learning something by all of these answers, but I need her. I need Cammie to tell me that one step further, because she's getting the shirt. Her answer was already the one I was looking for. Average is not the best prediction of a gain. Okay. All these are great because it's exactly what I'm trying to say.
How about you just give me the,
I'm just going to give it. So here it is. Can you guys see my page? If you invested $100 in the market for an average rate of return of 25%, if you invested $100 and it made 100%, your money would grow to 200. But then the advisor or me, if I was an advisor at that time, lost 50% of that 100 that I just made you. You would be back down to, and I'm over here somewhere doing this backwards, $100. But then I answer back and I get you another 100% return. So I made you 100, then I lost 50. I made you another 100, but then I lost 50% again. So I was on a roll, right? I made 100, lost 50, made 100, lost 50. How much money do you actually have in your account? The same amount you started with. What is your average rate of return? 25%. I know that's chicken scratch on there, but what I'm trying to help you understand is that an average rate of return is not what it seems. Would you be happy with a 25% average rate of return if all you had was the money that you started with in that example? And that's a real example. I have a whole presentation I do on this. You wouldn't, but that's true. If you looked at like any of the mutual funds, whether it's a Fidelity or any of the other ones, that's going to show you the average rate of return of any of the funds. But what you don't understand, go ahead.
Yeah, I said that was crazy. So it was a 25% average return, but your money didn't change at all.
No, it's the same. Actually, you wouldn't have $100 because wouldn't you have paid fees? And didn't you have taxes on this 200 if it wasn't a retirement account? Yeah, you would have probably paid taxes on that 100 gain and that 100 gain here. So you have taxes. So this would be an average rate of return. That's what you look at. So Cammie,
here's Cammie price wing.
All I need is email me. Yep, there you go. It's an average. That's it. Perfect answer. It's exactly what I was looking for. Every one of you had great answers. There wasn't a wrong answer. You know, the only thing that I admire all of you in your answers, not one person said yes. And I love that because you are way ahead of most people I speak to. Most people would have been like, oh my God, average rate of return at 25%. Sign me up. I'm ready to go. But all of you understood there was a material thing wrong with that. Cammie was the only one to really nail it down and say it's an average. It's not a real return. And she's right. So Cammie, tell me what size shirt you want. I have up to extra large. These are women's V-necks. And if you wanted it in a men's shirt for some reason, you want to give it to the hubby or someone in your life, then just tell me what size and I'll send that over. All right, let's keep going.
Hey, Chris, can they learn stuff like this at your money school that you're?
Oh my God, yeah. So one of the things is
program.
Yeah, this is just super fun. But what I've created right during coronavirus, I had to stop going out and doing these events live. I did 3-day events teaching people how money really works. Not just the stuff we're doing in these questions, but like literally like how to change your life, understanding how money works, how to turn your house from a liability to an asset, how to have your house pay for your car, how to earn a guaranteed rate of return by being the bank. There's on and on and on. Anything money and everything is relevant to exactly what's happening right here and right now. We put trainings up every single week, and they're not always me doing them. They're other people. So this community is called Money School TV, MSTV. It is literally the greatest creation I've ever done. There's all sorts of trainings. Not one is longer than 18 minutes long. So they're bite-sized little pieces. Then every single month, you get me. You get me to coach you for 2 hours. We do a group coaching. I bring in some of my mentors, people I pay up to $5,000 a month to mentor me. You get them for free. You get them and you can ask questions. It's an open coaching, 2 hours every month. Plus you get access to my entire team through a strategy session. We do 15-minute strategy sessions, and there's so much more in there. I keep adding on and on. There's tools and resources. So it's $19 a month and $190 a year, and you get access to everything that you just said. So that's where I teach all this. It's the only place I spend my time anymore is in that, or talking to my good friend Duck here doing his, because I just love this. And kind of how this whole thing started is, I did a live on your show. I think it was your private group, right?
Yep.
It was your private group, and I did a live, and I started doing calls with all those people from that private group, and literally, like, I was able to change some of their lives in very simple ways, but simple things that to me are just normal and just easy to understand, but to them, they were stuck. They were either, in debt, or they had problems and they didn't know how to get out of them. And I just looked at it as a disinterested third party. And I was able to look at it because I understand how money works. And I was able to just reconfigure what they were doing. And I literally had people crying, and I cried with them. So don't think that I'm like some tough guy. I cry, and I was crying with them because I was so touched that I was literally able to show them out of the hole that they were in. And that's what this is.
The ones that did a one-on-one consult with you, they love you, man. They give you praises. So I put on this in the comment section the link to that money school. If you're interested in that, just click that link. It should be okay, I hope.
Yeah.
All right, let's do another one.
All right, let's keep going. And this one, I'm going to give away this book, Mapping Out the Millionaire Mystery. This book absolutely will show you one of the things that wealthy people know that you don't. This book will show you how to erase your debt. It will show you how to get all the money back for all the cars you've ever bought, driven, or all the cars you will ever buy, drive, and own. It'll show you how to do things you don't even think are even possible. This book holds the secrets of the wealthy. And it says in the back of it, what if you could get all the money back for every purchase you've ever made and create wealth through the debts and expenses that you already have? Now, if that doesn't sound interesting, then there's something wrong with you. But I'm just kidding. Anyway, this is the next prize right here. And I'm going to give away a lot of these because this book's very valuable. So let's do this. Let's see. Which one do we want to do? We already did that one. All right. Did that one. All right. Here's a good one. And this one's kind of very relevant for this book. What do Ray Kroc, Walt Disney, and J.C. Penney have in common? It's something that they all did during the depressed times when they started their business. Not so much Ray Kroc, but Walt Disney, J.C. Penney's, and Sears all did something. They found money somewhere to start their businesses, and Ray Kroc did that.
Yeah, I know the answer to this.
Yeah. So what do they all have in common? There is one thing that each one of these guys has in common, and how they started their businesses, or like Ray Kroc, not just started, but how he pushed his marketing plan to Ronald McDonald and kicked off his real estate. What is that? Got the book. My son borrowed it. All right. So let's get the answer. What do all three of these have in common? You need that book. All right. Erica needs the book. So that's an easy one. All right. What do they all have? Nope. Franchises? Nope. They all started to franchise later. But, J.C. Penney's didn't franchise, if I'm not mistaken. Visionaries. Well, that would be a good answer. They were all visionaries, but that's not the answer I'm looking for. I do like that. Television. J.C. Penney wasn't in television. Bankrupt. Walt Disney didn't. Well, yeah, Walt Disney actually did go bankrupt, but prior to that. So that's a good answer. Pursued his passion. I love that. You guys are great, but there's an underlying thing. Used other people's money. They did not use other people's money. That came after. There's something where all three of these people have this in common, and it's where the initial money came from to start their businesses or to kick off different divisions of their businesses. And for Walt Disney, J.C. Penney, the thing that you got to think about is they started their businesses during the Great Depression. During the Great Depression, that's maybe a tip. During the Great Depression, they couldn't go to a bank. There was no real money, so they had to find money from a source that not many people know about. And what did they do? They did not use their inheritance. Let's see. A rich granddad. There we go. Faye got it. Faye, but what kind of insurance, Faye? What kind of insurance? Where did their money come from?
That's what we're going to get. Oh, hold on. How about that?
Oh my God. That is it. That's it. So Myra got it. So one thing that you need to understand that Myra just nailed, they all took loans from their whole life policies to start their business. Now, why? Why is that important? It was important because there was no other financial institution that would give them the money they needed to get those businesses started during a time of economic collapse. Sound familiar to right now? The Great Depression.
Norma and Myra.
Yes, I'm going to give it to both of them. Both of them are going to get the book. So Norma and Myra, you both nailed it. Whole life insurance. They took loans from their whole life insurance policies. Walt Disney World would not be a thing if it wasn't for his whole life. Sears wouldn't be a thing. Well, it isn't anymore, but you get the drift. JCPenney just filed bankruptcy, but they started and ran all those years on that. Ray Kroc used a loan from his whole life insurance policy to kick off the Ronald McDonald advertising campaign. And you guys all know that. Great answers. So you two winners, I need your name and your address emailed to chris@themoneymultiplier.com. That was awesome. Man. Oh, Duck, you know what the funnest part about this is?
I was surprised, man.
Oh, that's awesome. Every answer that people gave, visionaries, they followed their dreams. Absolutely. But dreams can only happen if you know how to put those dreams to work and make them happen. Now, without money, could that have happened? Could Walt Disney World have happened without money? No. Could Ray Kroc have kicked off that marketing campaign without money? No. Could JCPenney's and Sears have opened without money? No and no. They needed money, and they went to one of the oldest financial institutions, one of the safest financial institutions, and that was mutually owned insurance companies. And the company for Walt Disney, if anyone wants to know, was New York Life, and that was the company I started at. Great answer. All right. Let's do a movie quote. I want to do a movie.
Let's do a couple questions here. Is that... What about an annuity?
Yeah, no, not even close to the same. Annuities are kind of like a retirement vehicle. You can put money into it. They're not only retirement vehicles, but they're places where you're going to put money and you're going to leave it for future use because they have surrender charges. As an advisor, I did a lot with annuities. I hate variable annuities. They're extremely high in fees. They are not a good financial instrument. But annuities and mutually owned insurance company whole life policies are two totally different things. The insurance companies might do both, an annuity and an insurance, but they are absolutely different financial instruments for different uses. Very important.
Cher has this question: whole life, if you get it for a grandchild, do they have to live near me or with me?
No, not at all. Not at all. You just have to have an insurable interest in the person. So you absolutely would have an insurable interest in that person. And, you know, if you haven't watched the other lives that we've done teaching you all about how to become the bank using a specially designed whole life and the money multiplier method, that's what that book's all about. But that would be a great thing for Cher there. All right. Let's keep rolling here. This is fun.
Bonds versus stocks.
Okay, that's an easy one. So a stock is an equity. Okay, so when you buy a stock, you are investing in that company as an equity play. Okay, you are basically saying, I'm going to put money into this company and I'm going to essentially have a vested equity interest in that company. Now, I know it's probably not a lot, but you still are technically an equity owner by buying stock. A bond is a debt. It's an IOU. So if you buy a bond, the company, whoever you buy the bond from, is issuing that bond to you as an IOU. Literally, I owe you the money that you just bought that bond for, and I'm willing to pay you a yield or interest on that bond. So it'd be like me loaning you money through my company and saying, I'm going to give you an IOU in the form of a bond, and I'm going to pay you interest on that. Now, that interest can be paid monthly, quarterly, annually, but a stock doesn't so much have to be anything other than you are participating in the equity. So if the stock price goes up, you make money. If the stock price goes down, you lose money. If the company goes out of business, game over, you lose it all, which would have been the case for WAMU and so many other stocks that went out of business, JCPenney's being one of them, and Sears. So if you own JCPenney's and Sears and you had stock, you would have lost it all. That's it. Great stuff, man. This is
everybody's loving this information, man.
See, you can have fun and still learn, which I started doing this by doing a thing called Free for All Fridays, where I would just give a bunch of stuff away. I got a whole thing. I used to be in the clothing business and we still make shirts. I got all these shirts and I can't sell them because everything here in New York is closed. This is way more fun just to give the stuff away, but give it away in a manner where people learn. That's the best part about it.
Universal versus whole life.
Universal Life is a product that was developed in the late 70s, early 80s, and it was designed to almost kind of mimic the cost of insurance of a term policy, but still give you different flexibilities and different uses of the money. So it's kind of like a whole life where you basically put money in, you will have cash value. However, universal life policies have one thing that whole life does not, is a rising cost of insurance. So every year, a universal life or an IUL gets more expensive. Every year you own it, the internal cost for the insurance gets more expensive. Whole life is 100% level. The other thing whole life has is a contractual guarantee. Universal life also does, but it also has a variable interest rate on it. So their guarantee might be 1%. If it's paying 3% now, that's your risk, right? IULs, I'm not going to get into those, but there's a lot of different variations of universal life, but whole life has been around the longest. It is the one vehicle that has been used by the banks and the wealthiest Americans ever. That's what they use to store their wealth, is whole life, not universal life. Just different uses. Great questions.
What about day trading?
Day trading, if you have the time, I mean, I teach day trading. I mean, I've got a whole program right before I came on here. It's called 10-10 trading. And we teach one strategy, which is a day trading strategy that you can use.
Is that in your money school?
Mm-hmm. Yeah, it's all. Yeah. So actually, funny. I keep getting, thank you for bringing me back because I keep forgetting. So we teach the day trading inside of MSTV. There's different levels. So, you know, you can, there's a lot of trainings that we teach in there for the $19 and the $190, but in full transparency, to get the full course, like the whole digital trading course, it is an upcharge, but it is there. And we teach stocks, bonds, all that stuff. So day trading is basically,
again.
What's that?
I just posted the link again in the comment section so people can go find Money School TV. You
guys will, Money School TV is literally just, it's phenomenal. I don't know how else to say it. And I'm not just saying that because I'm trying to get you to buy into it, but I swear to God, it's for $19 a month. You'll never find anything that will give you more value than that ever. You just won't. You're
giving great, amazing free value here. So I can't imagine, you know.
Holy crap. You like, I'm putting my best foot forward, but I literally jump through walls for you in MSTV because it's my one place where I communicate with everybody. It's the sole place I spend my time. That's
what I do with my challenge. So let's talk real quickly before you get another question about some of these companies that have gone out of business recently. J. Crew is bankrupt. JCPenney. I mean, JCPenney's been on fumes for a few years.
Long time. Yeah, and you're going to see a lot more companies go out of business. The reason you're not seeing companies go out of business right now is because of the stimulus. Okay, the PPP loans have kept a lot of these companies afloat, but when those PPP loans end, okay, and they can't maintain, you're going to see the you're going to see the monster show its teeth. The monster's there, folks. And whether you look at my chart behind here or you follow me, you know, and learn more about what I know, but I can tell you right now, contrary to what other people will tell you, the markets cannot hold these levels, and they will not. Again, don't even believe me. Look at someone like Ray Dalio. He's way smarter than me, and Warren Buffett, way smarter than me. Listen to them. It's not easy to find the information I'm talking about. You got to go to TED Talks and private places because the media won't put that stuff out. The media doesn't want negative press. It's an election year. They're not going to put it up there. Folks, you have to sometimes seek out the knowledge, because if you don't seek out the knowledge you're looking for, the knowledge you're going to get is going to be self-serving knowledge that has an end purpose, and it's not always in your purpose. It's not always your benefit. So these companies are going out of business because fundamentally they weren't prepared for this. They didn't pivot early enough. They didn't change their business model early enough, and now they're like the dinosaurs. They're extinct. And folks, there's going to be a ton of companies that are going to become extinct. Again, 60%.
This is a great question. David Caldwell, how do you identify trends on stock charts when we're in uncharted territory?
I would have to show you using a stock chart and using indicators. Here's what I'm going to say, David. You have to understand how to fly the machine being the stocks in the stock market, without looking out the window. Think of flying a plane. A pilot learns how to fly a plane first by seeing what they're doing. But when they get in the clouds, they don't know where they're at. You've heard of a lot of pilots going down because they didn't know how to read the instruments. In stock trading or options trading, you need to know how to read the instruments. I could literally look not at a chart, but I can look at the instruments, the MACD, the stochastics, the volume, the momentum. These are indicators that will tell me the direction of where a stock's going to go because of where it's been. Past determines the future. I can't tell you when it's going to happen, but I can tell you within a very good probability, about 93% probability, where a stock's going without even seeing a chart. And the other thing too, David, that you really should learn, and you can do this on YouTube, learn about support and resistance levels. All stocks trade within very rhythmic patterns, just like this. See my chart here? Stocks trade within very rhythmic patterns. And actually, I got all sorts of them right here. And those patterns will break when there's a breakout or a breakthrough. Okay, they'll either go up or down. Stocks always work on greed and fear. And fear will drive a stock down. And that's called volume. Okay, if there's a lot of volume, but it's negative bearish volume, it will drive a stock down. And if there's a lot of volume up, because if there's positive news, bullish news, it will drive it out of that pattern. Stocks always work in very rhythmic patterns. So does the overall market. The market always goes up and down within the very predictable pattern of 7 to 10 years. This went down in the 11th year, one of the longest historical bull runs ever. And I could have told you last year the market was going to go down just based on patterns and signs that I saw that every one of you could see. It's very easy. And I teach all this in Money School. There's an entire thing called Market Patterns, a video in Money School TV that teaches you all about this. David, that's a very important thing. Look at support and resistance and join me in Money School, and I'll teach you all about it.
I'll put that link for Money School again. Let's do another giveaway.
Let's do another shirt. Let's see. No, I did that one already. Let's do something else. Where's all my other shirts? Oh, I'm rolling over them. Oh, crap.
I think we should do one more shirt and then maybe the mystery gift.
Let's do one more shirt and mystery gift. So this is going to be for you guys. This is going to be either you run the day or the day runs you. Okay, we're going to do this shirt. Either you run the day or the day runs you. Whatever size you want. This is so soft. There's the logo, Buffalo, F-bomb. So that's the shirt we're going to give away. And I'm going to do one for men and one for women. Let's give two away. 2 for 1. How about that? We need a guy to give me the right answer and a female to give me the right answer. So the men and the women, and same shirt, right? Here we go. Men and women, we're going to give those 2 away. What question do I want to ask? All right. I'm going to do this. This is a movie question. So you're not going to learn, but we're going to have some fun. But you are going to learn. That's the thing. So I've been in Money School less than 10 days, and I haven't hit the tip. She hasn't hit yeah, right. Absolutely. There's a ton of information in there. So here's the question for the shirts. What movie did this quote come from? Okay. First rule of Wall Street. Nobody, and I don't care if you're Warren Buffett or Jimmy Buffett, nobody knows if a stock's going up, down, or effing sideways, least of all stockbrokers. But we have to pretend we know. Okay, so that came from a movie. What movie did that come from? Because there's a lesson in that. It's an awesome freaking movie. And I should have just swore, because I know you do. I should have just said down or fucking sideways. Least of all stockbrokers. You got it. Russell got it. The Wolf of Wall Street. Kind of a what do we got?
Pam.
There we go. So Pam, so those are our 2 winners. They each get a shirt. I just need to know your size when you email me, folks. That was awesome. So you got this shirt, either the day runs you or either the day runs you or you run the day. So each of you email me your name, your address, and what shirt you want and what size you want to chris@themoneymultiplier.com.
Can we do 3 shirts? Because Terry was right there too.
Sure. Yeah, not a problem. So Terry, also email that to me. You're just chris@themoneymultiplier.com. Send me your size. Let's see. Let's do the mystery gift. I thought this was fun. I went in the back and I literally had a wrapped up thing. So I'm going to put something in this and I'm going to ship something in this box. And it's not going to be what you're thinking. The mystery gift is not going to be what you're thinking, but you're going to laugh your butt off and you're going to thoroughly enjoy that. So let's see, what question can we ask about that?
Congratulations to Terry and Russell Wyatt and Pam.
Yes. So I'm going to teach you something with this one. And for the mystery gift, this is not a hard question, but a very important question. And the thing I'm going to ask you is, does everybody understand how banks make money on your mortgages? Now, we all look at mortgages, right, for our houses. A lot of us have mortgages. We look at our mortgages. We look at our mortgages and what do we look at, right? We look at the interest rate. And right now, interest rates are at an all-time low. So the question here is, let's see, how often does the average person move or refinance their home? Okay, so how often does the average person move or refinance their home? Okay, so that's the question. But the reason I'm asking that question, once I get the answer, is I'm going to explain that. So I want you to learn something. This is very important. So let's see who can get this right. How often does the average person move or refinance their home? Every 3 years? Nope. 5 years? Okay, nope.
Here, oh,
It's nope, not 10 years.
hold on. I see.
Every 6 years. Ashley got it right. So what's unique is the actual range is 5 to 7 years. So the 5-year would have been right, but we just refined that. And I went and I sourced out that information. It is every 6 years we go in and we refinance. So Ashley, you won the gift. Okay. So I need your address. So email it to Chris at the Money Multiplier and you're going to get the gift. And then here's the reason I want you to know that. You see, we have been tricked the whole time about how we buy our houses, right? We get really excited about buying a house when interest rates are low. And I understand why. You go to the bank or you see the advertisements, 30-year fixed mortgage, 3%. You're just like, oh my God, honey, we have to buy a house or we have to refinance our house. But the bank the whole time is laughing at you when they're doing this. You see, what the banks figured out is it's not about the interest rate. It's about the volume of interest. How many of you have actually ever looked at your mortgage statement? When you got your statement, you look at it. I want you to look in the first 6 or 7 years of your mortgage. I want you to look at how much money is going to interest and how much money is going to principal. And then that would have been another question if I had one. Actually, real quick, double it up. For the question, how much in the first 7 years of your monthly mortgage payment is going to interest? First person gets a pair of these glasses. Let's just get a bonus round on that because somebody's got to know the answer for that. So first person that can tell me how much money on your mortgage payments goes to interest versus principal. So how much of your payment goes to interest in the first 7 years? There's a percentage. How much? It's not all interest, Avery. It's not 95%, Nisha. 80%. It's 80 to 85%. So we had a couple winners. Holy smokes. You guys read my book or knew that somewhere. So I'm going to give away 2 pairs of glasses. So the first 2 of you that did that, I'll give you away 2 pairs of glasses. And these glasses are awesome. They're basically designed with the Money Multiplier. And the reason we did these is
and Guy.
Yeah, so whoever were the first 2, but these glasses were created because when I was an advisor, I was always wearing the rosy colored glasses. And it wasn't until I took the glasses off and started seeing the truth about how money really worked, I didn't understand how money really worked. So back to the volume of interest. So if 80 to 85% of every one of your payments is going to interest instead of principal, does it matter that you got an interest rate of 3%? The answer is no. Because the banks figured out that it's about the volume of interest. It's hence why banks make all their money in the first 10 years on a mortgage because they front load all the interest. It's called volume of interest. But then they were even smarter, which is why I asked the question. They were smart enough to go in and do a study, a very expensive study, to find out how often do people buy or refinance their home. And then they figured out the marketing strategies to figure out who do we market refinance products to get them after the 7th year to refinance, to take the equity out and then hopefully reduce their fee or their payment. But the bank is really just resetting the volume of interest. And then they're making all those closing costs and all the interest again and again and again. If you ever don't think banks are some of the smartest sons of a pups out there when it comes to making money, they are, because they know something we don't know. You now know it. So don't allow that to happen. Become the bank. Learn how to be the bank. I teach you how to do this in Money School TV, and I want you to learn these things because they will change your life. Oh man, this was freaking fun. I love this, and I got more stuff. We got to do this regular. I got a lot of stuff to give away.
Come back on Friday? Do you have time?
Yeah, I think I do. Yeah, and I'll ask Shauna. But yeah, let's just make it happen. Because sometimes this stuff is so valuable for everybody. And hey, I got more stuff to give away. Let's just make it happen. If I got to move an appointment, I will commit to moving that appointment for you guys. Sean is listening to me probably over in her office going, oh, here we go again. But let's do it.
That's awesome.
Yeah.
So for the viewers who are still watching, if there was one tip you could tell them right now to protect their money and future wealth, what would you tell them?
I would repeat what Will Rogers says, and you've heard me say this before, but this is the most important thing you need to understand. Will Rogers said that the biggest problem in America is not what people don't know. The biggest problem in America is what people think they know that just ain't so. The reason I say that as being the most important thing for you learning and getting back control of your money is because you need to stop taking advice from people that don't know or don't do what you are trying to do. If you have dreams and goals, chase your dreams and goals. And the only people you should take advice from are the people who have done what you are trying to do. If you're taking advice or taking direction from people that have never done what you're doing, then I need to ask you why you would think that that's logical advice. If they've never done what you've done or that you're doing, if they've never failed trying to do what you're trying to do, then how can they give you solid advice on where you're trying to go? The answer is they can't. But this happens every day in our lives. It happened in my life, and I'm sure it happened in many of yours. People that are the closest to you give you advice, tell you not to do something, tell you something's foolish, shake you down, break your dreams, and ruin your dreams because they think they know what's best for you. You are the only one that knows what's best for you. And you are the one who needs to learn how money works because you are the one who cares about your money more than anybody. There is nobody else that will ever care about your money and your financial future more than you. So it's time to take back control. It's time to learn how money works. And it's time for you to put yourself in the driver's seat instead of being in an Uber, getting taxied around and then having to deal with that. Drive the car. It's the time.
You know what? I love to reset people and just remind them that, you know, you were, you wanted to be a pro snowboarder. And at the age of, what was it, 17, you opened your line of stores.
Yep. Batman board shops.
Batman board shops. You've been an entrepreneur your whole life. Then you got your Series 7 financial planner. You worked at the biggest firms. You've done over $50 million worth of real estate deals, and north of 50 million. You risked it all on that HGTV show,
and it didn't work. You know, the show launched, we had really great ratings, but then Discovery bought HGTV, and that door slammed in my face. That was a big hit. But hey, you're going to get the door slammed in your face. And you know what? When it slams in your face, understand that whatever you believe in, another door will open. For me, it was God. God opened another door, and that door was the path I was supposed to go on. The show was just a learning lesson to teach me what I needed to know to take the next step in my life.
And people need to remember that, you made money, then you lost it. You came almost
one payment away from being completely bankrupt. Literally, and true story. I could show you the bank statement.
Rebuilt it up, had another little blip, and now you're back on your way.
Yeah.
So talk about learning from failing. I mean, you're the living example of what you just said. And I just started sharing this recently. I was $4 million in debt, and I did go bankrupt, and it was from bad real estate deals because I didn't know what I didn't know. It just wasn't so. What I thought I knew wasn't so.
It's the truest statement I've ever heard, which is why I repeat it so much, because if I had just followed that advice, I would probably be in a different place. Not that I'm in a bad place, but I'd be in a different place. And that could be said for a lot of people. But I had my father, I had the people closest to me, my best friends saying that I was crazy. Like, why would you do this? Son, just get a job at the factory. I'll get you a job. Why are you chasing these silly dreams? You're going to lose everybody. You're going to lose all your money and other people's money. Like, don't do it. I didn't listen. I sent him this, and I love my dad. My dad's no longer an alcoholic. My dad is now like on the path to, being just a great dad again. But I sent my dad that CD, that cassette tape back then, Cats in the Cradle. I cry every time I listen to that song. And I'm not a weak person. Don't think I cry a lot, but like that one gets me.
How's the new baby?
She's awesome. Viviana is just doing fantastic. She is the best kid. She doesn't cry. Oh my gosh. She's, just a blessing. I don't know. Never loved something so much in my entire life. And it's changed my whole perspective.
Absolutely. Well, I want to have you back on Friday. So let's put that on the schedule for the guys who are still watching. We'll get Chris back on Friday, play some more quizzes. We love you to educate. I think at the heart of it all, Chris, you and I are both teachers. We love to teach people what we know.
Absolutely.
I do, health and wellness, and you're the America's #1 money mentor. So there you go. And they go hand in hand. Wealth and money, wealth and health, man, they go together.
100%.
Sure. So I love having you on the show, and you speak from a place of truth, So if you want to get into the money school, where Chris teaches. You do lives, right? How often do you do your lives in Money School?
Once a month, we do a 2-hour live. And then there's other trainings that I do, which you can join, which are live, but you can only hear about those if you're in Money School.
Money School. And then you have guests and friends who come on and teach.
And a private Facebook channel, which I'm live on all the time. Sometimes with goofy, silly stuff, like just stuff of what I'm doing at home. But like, it's my tribe, man.
Yeah. So your private Facebook group, you do lives on all the time too. And you're really teaching the most up-to-date money stuff. So it's not a static. It's not like, I mean, there are pre-recorded videos, but the content is constantly getting updated. So because you got to stay up to date with these money matters, right?
Absolutely. Every day things are changing, and every day your knowledge you need changes. What I was teaching a month or 2 months ago is very different than what I'm teaching today.
All right, buddy. Thanks so much for having you.
I appreciate it. And I thank you all for your time.
Man, how amazing is Chris Naugle? Wasn't that fun? So much fun. If you want a prize, make sure you message Chris, email your name, what prize you won. If you did the t-shirt, make sure you do the size. And so he can mail you your gift. And I'll have him back on Friday, this coming Friday, like in 4 days or 5 days, whatever. And we'll see you then. All right, guys. Man, go have a blessed day. Be amazing. Love you. Bye.